As regards the commodity block of currencies, here the situation is a little bit changed comparing to yesterday. As Australian dollar is a little bit supported this morning because of the fundamental pictures. As you know, the Australian retail sales released over the course of last night produced a kind of very healthy result. And from this point of view, the Australian dollar should be well supported over the course of starting trading day. Also because of the weaker United States dollar story. But anyway, the market should concentrate its attention on the United States economic numbers and the appearance of Jerome Powell, the head of the Federal Reserve. And from this point of view, only weaker United States economic numbers in the form of weaker payrolls numbers or more kind of neutral view expressed by Jerome Powell should produce a lower United States dollar in the nearest future and higher antipodeans. And from this point of view, the Australian dollar, New Zealand dollar and Canadian dollar has a kind of room to appreciate some further in the nearest future if our scenario will be realized. So, the Australian dollar from a longer term perspective should be treated positively while trading above a longer term uptrend line located at 76.10. So any kind of retreat to this level we will use as an opportunity to establish new long positions in the currency. As regards the Kiwi dollar, the pair is still trading on the closing basis above its moving average 200 daily line located at 71.82, and while so, the pair should sooner or later retest the highs of 2018 at 0.7435. Anyway, we still here in the Kiwi or in the Aussie, we still missing an opportunities to buy the currency. The dollar Canada, where we still keep our short trade recommendation, we expect that sooner or later this this kind of forming head and shoulders pattern should produce a retest of nearest support levels at 127, 126, roughly saying. And finally, the dollar ruble, where the pair is closer and closer to its longer-term downtrend line located at 58.80. Any kind of anyway, let's see this more closely. Let's see the daily graph. Here, as you can see, we draw a kind of downtrend line, and this downtrend line today located at 58.20. Break above this trend line together with kind of a lucky successful closing above 58.09, where is moving average 200 daily line, should produce a higher prices for the dollar ruble. But from a point of view of longer term horizon, you know that the pair still trading inside of the range between 55.50 and let's say 60.50, 61. While inside of this range, we should respect it and we should treat the currency more or less stable. See you later. It was FutureTrend channel.